I'm Matt Bishar with NAREIT's REIT.com. Joining me for this episode of Fundamentally Speaking is Calvin Schnure, NAREIT's Senior Vice President of Research and Economic Analysis. Calvin, thanks so much for joining us.
My pleasure, Matt.
Now, you were the architect of the NAREIT Total REIT Industry Tracker series, which launched earlier this year. For those who aren't familiar with it, what exactly is the NAREIT T-Tracker?
The T-Tracker is a comprehensive measure of operating performance for the total listed REIT industry. We look at funds from operation, net operating income, and total dividends paid. So we just sum up the total of those for all the REITs in our index every quarter.
And what were the third quarter results?
The third quarter results showed continued, sustained, strong performance. Total funds from operation was $13.4 billion, which is up 2.7% quarter over quarter, and that's a 13% gain over a year ago. We saw comparable increases in net operating income, up 13% over a year ago, and dividends paid were up 10% over a year ago. So this is good, solid, sustained performance for the industry.
So that's looking backward. Now looking forward, what's your outlook for economic fundamentals and REITs?
You know, Matt, the economic fundamentals have been a bit choppy. We saw third quarter GDP growth slowed to 1.5%, which is not a good performance. The job performance has been choppy as well. The August and September numbers were really weak, but then October came back pretty strongly. Now, these are reflecting a couple one-off factors. First is weak growth abroad, China, Europe, as well as a stronger dollar, hurt U.S. exports. Hurt U.S. exports and U.S. manufacturers. That had a lot to do with the GDP growth being weak. Another is lower energy prices mean there's less oil exploration, less energy exploration. That's had a lot to do with the job figures. Now, it's important to keep in mind, not only are these transitory, but they don't really affect REITs. There are some REITs that are involved in the inventories for the exports and so on, but by and large, REITs are domestic operations, not in energy. And you take out these other factors, and the outlook looks for pretty good sustained growth going forward. So I wouldn't be surprised if we saw continued strong operating performance in our sector.
Great. Calvin, thank you so much for joining us.
Again, my pleasure, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.